Hey guys, welcome back to my channel. And if you're new here, I'm Miriam Dow, wife, mama for a real estate investor and entrepreneur. So today we will be talking about how you can buy a property, your first property, with no down payment, no credit score requirement, no PMI, which is property mortgage insurance, no closing costs, no hidden fees, and no credit score requirement. Ladies and gentlemen, if you don't already know, I'm talking about the NACA program. The NACA program is a nonprofit HUD certified home ownership organization. NACA stands for Neighborhood Assistance Corporation of America. So I've been hearing a lot about the NACA program now. I have never used the NACA program before. To respond to one of the comments left on one of my previous videos, it was a college student asking on how to get into real estate. I have a lot of single parent subscribers, single moms, single dad, always email me asking how they can get into real estate. So as you know, the biggest part is that large down payment. If you're coming up with that large down payment, then you have to come up with the closing costs, which depends on how much the house costs and all that other stuff. NACA is a great way to get your first property. This is some research that I did on my own, but again, go to NACA.com, www.naca.com, and do your own due diligence. They actually have, in order to even get in the program, they have workshops that you have to attend. Have to attend a workshop to even get started in this process. So put your zip code in the website and see when the next workshop is next to you. And then they also have virtual workshops. And then once you do that, once you attend the workshop, you get your NACA ID. Once you get your NACA ID, then I guess you get assigned to a counselor, and then this is when they go through your paperwork, and then you go through the pre-qualification process. So if you watch my last video, I'm gonna link it right here. I showed you a case study basically of a property that's literally on the MLS right now, the day that I'm recording this video. And with 3.5%, I believe that down payment came up to a little bit under $19,000. So say you wanted to buy that property, right? I'm gonna put the property right here just for some visuals. There's no down payment. That $19,000, you don't have to worry about it. There's no closing costs. I remember I told you between $10,000 to $12,000 in order to put the closing costs on top of the down payments. Around 30 bands that you had to come up with, you no longer have to worry about $30,000 as a NACA member. There's no hidden fees. There is no mortgage insurance. Mortgage insurance is basically if you put, the way we're trying to buy these properties is the minimum down payment, right? Because we don't have as much funds available to buy these properties. So if I'm telling you to go buy a house using an FHA loan, 3% down, 3.5% down, 5% down, the lowest minimum amount of money that you want to go in, well, the bank now adds a PMI, which is a property mortgage insurance, to your mortgage. Sometimes it depends on the percentage. I've had mortgages where I'm paying around $250 a month added on to my principal, my interest, my property taxes, my insurance. So this is an additional fund that you will never get back. It's just insurance that goes to the bank because they basically loaned you this money to buy this house with under 20% down. You are avoiding that altogether with the NACA program. So you're saving money with the NACA program. There's no credit requirement. So they don't really care about the credit. What they do care about is your payment history. So this is what is very, very important. They're gonna look at 12 to 24 months of your payment history. So they want to see that you're paying your bills on time, paying your rent on time. They want to see that payment history. And for any missed payment you have or any late payments you have, there needs to be some kind of explanation that you put with each payment. I missed this payment because of this reason. I was late on payment because of this reason. So that's something that they really do look at. So, I mean, if you don't have the best payment history right now, this is something that we could work on. So if you know you want to get into the NACA program, within the next 12 months, you could start to work on these things. If they're not really looking at credit, you know, that's something that's a big bonus, because sometimes depending on the credit score, you know, it depends on the interest rate. So if you're looking at the payments, just make sure you're paying your bills on time for the next 12 months. And you can qualify. Good payment history is the biggest thing that they're looking at here. They're not looking at your credit score. When you're getting approved for an FHA loan, it's very rigorous. They're looking at your payment history. They're looking at your credit score. Now, another thing, when you're ready to buy a house or you're looking into buying a house, I remember when I was looking to buy a house, our very first house in 2017, the screen on my iPhone was cracked. My realtor saw that and was like, oh, I see your phone's cracked. Are you gonna be buying a new iPhone? And I was like, yeah, I think I'm about to go get a new one. She was like, please wait, do not purchase anything. And you know, with insurance, you know, that's only like $200 that you pay to assure you on whatever. She was like, no major purchases until after, because I was already pre-approved and now we're going through the underwriting process. So she was like, wait until you close and then you go and, you know, get your phone updated and stuff like that. So she's looking at little stuff like that. And a lot of people, they get pre-approved. They didn't really close on the house yet. They're probably going through underwriting. They go ahead and start getting, you know, they go to Bob's or Raymore and Flanagan, start getting these furniture credit cards, go to Home Depot, get these credit cards, or go buy a brand new car because now you probably bought a house in the suburbs and you're going to be commuting. You wait until you closed and you have the deed. You know, you have the title of the home and you have your keys. That's when you can go ahead and do that. So do not take out any credit, any major credit cards. Don't even apply for credit. Don't apply to finance anything. Make sure that is clear. No, they don't want to see any inquiries. You know, all of that stuff is really going to hurt you when you're looking to make a big purchase like a home purchase. I talk about investing. According to the rules on their frequently asked questions page, an investor does not qualify for this. So to even qualify for their loans, you have to not have any ownership in any other property, okay? So if you already have a property like me, I do not qualify for this. You and your husband live together. The mortgage is in your husband's name, so you are not on the lending portion of that, right? And you try to go and buy and get approved for the NACA program, you will not qualify because it's the household. So anyone starting from the age of 21 that's in the house is considered a household member. So if my son, even though my son's not on our mortgage, even though me and my husband owns this property, if my son was looking to go and qualify for NACA, he wouldn't qualify if he was 21 years old and he's kind of owner of this house. Does that make sense? It's on their website, so I was just reading as much information as possible. Another thing, unlike FHA loans, with FHA, you buy a property, you put the lowest down payment down, and you live in that property. You have to live in there. For FHA guidelines, you have to live in that property for 12 months before you could, you know, put a renter in there, replace yourself or whatever, taking advantage of that low down payment. That's not the case with NACA. With NACA, you have to live in that house for the entirety of the loan. So what you can do is maybe refinance, you know, live in the house and then refinance once you're looking to go do something else and put someone else in that property. But you would have to refinance into maybe a regular loan, a regular government loan, a conventional loan, or buy the house outright, you know, pay off the loan altogether. But yeah, they're not playing when it comes to that. They even have a lien on the house. Secure these guidelines, because they understand that people will come, you know, there's some people that will try to take advantage of the system. So this is for my single moms out there, my single dads out there, my single people out there, or my couples out there. You can use this program to purchase a condo, to purchase a single family home, or purchase a multifamily home. So you could buy small multifamilies between 1 to 4 units. Anything above that won't qualify for the NACA program. So this is great. With the house hacking, you can buy a duplex, a triplex, and you know, for all my people that probably lives in the city, but now you work remote, you do not no longer have to live in New York. We need to get that out of our minds. Go somewhere else and buy a property where it's less expensive. Buy you a duplex, a triplex, a quadplex, live in one unit and have 3 renters in the other units. You can live there for the long haul if you want to, because at the end of the day, you're going to be living rent free. Your tenants are going to be taking care of your mortgage. But if you decide that you want to replace that unit that you're living in, you have to refinance out of that NACA loan altogether. Okay. There are some rigorous rules. This is not something that, you know, investors are about to just go do and pick up. This is nice to know that there's options out there for people who are just like, this inflation is inflating right now. You know, it's just really, really hard. And honestly, I have a family member paying $2,000 for a 1-bedroom in Harlem, for a shoebox in Harlem, the close vicinity to downtown and being in Manhattan. It's insane. Like even the Bronx, housing is crazy. And every year when that lease is up, every 2 years when that lease is up, they just keep adding more money to it without any explanation, with horrible property management services, with the, you know, they never come in to repair anything. They don't fix anything. When that lease is up, they're not coming to, you know, rechange the cabinets, give you stainless steel appliances, but your rent keep going up every year and all of that. So this is a great way for you to have some control over that. You're gonna own your own property. You can have tenants in there if you wanna go with a single family. If you just wanna not even invest, but you just wanna take advantage of the NACA program. I'm just gonna go through the frequently asked questions on the NACA page. Who is eligible for the NACA mortgage? As priority members are home buyers whose income is less than 100% of the median income in the metropolitan statistical area. Priority members can purchase their home anywhere. Non-priority members are home buyers which income equal to or greater than the median income for an MSA must purchase in a U.S. Census tract where the median income is less than 100%. So you're going to get assigned a counselor that's going to tell you what this really means. What are the eligibility requirements for NACA's purchase program? 1, no member of the household can have an ownership interest in any other property at the time of closing. So if you have a 21-year-old son who owns a property somewhere, but he's trying to live in your house, you guys don't qualify. So they are very rigorous with these rules. Number 2, occupy the home over the life of the NACA mortgage. We covered that. Participate in 5 actions and activities a year, and at least 1 prior to NACA qualification and 1 prior to closing and achieving NACA's overall mission of economic justice. I don't know what that is, but there's some kind of activity you have to participate in order to qualify, and then be willing to abide by NACA's terms of membership, participation, and eligibility. This is not your regular loan, but what I do love about it is they have a 6% for 30-year fixed mortgage. They're offering 5.5% for a 20-year fixed mortgage, and they are offering 5.75% for a 15-year fixed mortgage. Now, you know, something that this is not really spoken about. When I was buying my house, I just went with the 30-year. They don't really advertise these 15-year mortgages, these 20-year mortgages, these 10-year mortgages. You know, you could literally ask your lender about 10-year mortgages and 5-year mortgages and 20-year mortgages, because that 30-year mortgage is where the lender is making the bank. Over that 30-year period is where they're making the most amount of money on interest on you. So when you are looking at these properties and you're talking to a lender, ask the lender what your mortgage payment would be when you come down to 20-year mortgage, when you come down to a 15-year mortgage or 5. They don't want us to be asking these questions. And of course, we're always looking at the payment. We're always looking at the least payment. But what we really need to be looking at is how much money we're saving on interest when all those years be adding up. So that's something that, you know, we really need to look into. 20-year mortgages, at the end of the day, you're going to be saving money on the interest rather than a 30-year mortgage. So always keep that into consideration. Just don't go just asking for the 30-year mortgage. I heard they coming out with a 40-year mortgage. We don't stay away from that, okay? The NACA program sounds too good to be true. How can this be true? NACA and its membership are benefiting from the people who have fought and died in the struggle for civil rights and economic justice. NACA continues the struggle through the active participation of its membership. Because of its advocacy and state-of-the-art operations, NACA's purchase program is even better than it sounds. That's crazy. What are the purchase program costs? Current annual membership fee is a nominal $25 per household for as long as the member is in the purchase program. So can a NACA member purchase other properties after closing on their NACA home? Yes, there is no limit. What is the occupancy requirement? At the time of closing, the house purchased with NACA mortgage must be the member's only home. So I do not qualify. After closing, the property must be the member's primary residence that he or she occupies. NACA takes out a lien on the home to ensure this requirement. This does not prevent any member from selling their house, refinancing, or purchasing additional property after closing, as long as they meet the occupancy requirements. So go on their website, take a look at their rules and regulations, take a look at the workshop if you're interested. I mean, I'm like, why not? Just go to a workshop. You don't have to really be ready to do it now, but it gives you a better understanding. But to be honest, this shit is a no-brainer. And this economy, with the rent prices going high, like even if you're not ready to start investing in property, just your living costs, the fact that you could acquire a home with no down payment, no credit necessary, I mean, that's gonna help you get into the home. Veterans get these great loan programs where they don't have to put down no down payment. And this is very similar to that, but it sounds like it's even better. And most of the population right now is really hurting. It feels like the middle class is like disappearing. It's either rich or the poor. That's what it feels like. It feels like middle class is becoming non-existent. So if you can get into a property, even if it's not an investment property, but a property to call home, where you have a say and you know what your mortgage is going to be, and you know, in 1 year, 2 year, your rent's not going to go up, and you actually are in a nicer neighborhood, you could raise your kids in a nicer area. I think it's something that you guys should definitely look into. So I hope this was a really helpful video, but I feel like the NACA program paired with, you know, buying a property, you know, every 2 to 3 years, you could refinance out of this. It's good. It's a good stepping stone. It's something really good for beginners, for people who don't have homes at all. So definitely look into it. I think it's a great opportunity, and I hope this was a helpful video. Please subscribe to the channel, put some comments down in the comment section down below, and I'll see you in the next video.